The Dearborn Independent, Chronicler of the Neglected Truth, October 30th, 1926, Volume 27, Number 2. Putting Sense into Taxation, a Plea for Raising Revenue Without Destroying Prosperity by Samuel Crowther. We talked about tax reaction. There is only one way to effect tax reduction, and that is by reducing the amount that state spends. We must either pay the piper or not hire them. How much government do we want, and how much do we want to pay for it? Are you getting your money worth? Are you paying for the government with the minimum or with the maximum of inconvenience? Then why search for the painless tax at all, since the best we can get is a poor substitute? Since we cannot know exactly what taxation does to us, why not do the next best thing, know what we directly pay, and abolish all painless taxes? Why search for what cannot be? The noon whistle blew. The visitor, looking at his watch, asked the factory superintendent, "Is that the right time?" "Sure it is. It's observatory time." "Do you see that big clock across the street in the jeweler's window? That's one of those telegraph clocks. It's always right, and we go by it." The next day, the visitor happened to be in the jeweler's shop. He compared his watch with the jeweler's clock and asked absently, "Is your clock right?" "To the dot," replied the jeweler. "It hasn't varied half a minute in a couple of years. That factory across the street gets the time directly from Washington, and when the noon whistle blows, I look at my clock and it's always right, or at the most just a fraction of a minute off." That is the way with good many authoritative statements when tracked to the lawyers, particularly when we get into high realm of government finance. We spend what we can raise by taxation and borrowing, but we also tax and borrow according to what we spend. It is just like the old game of fixing wages on the cost of living. Wages and the cost of living are results of efficiency and directness of production and distribution. If we regulate our taxes by our expenditures and our expenditures by our taxes, then no matter how learned we may look, we're merely setting the factory whistle by jewelry clock and the jewelry clock by factory whistle. That is, we never know what time it really is in our public finance. The first real tax question: what do we want and how much do we want to pay for it? The second question is, who should do the paying? And right here we run up against a fact which is not commonly emphasized. We should not continue expenditures in their present value, have much bother about tax rates if it were not for the exemptions. We legally exempt between 1/5 and 1/6 of the entire wealth of the nation from taxation, and it is only a fraction of the actual total exemption. Tax-exempt bonds are only a trifling part of the exemption. It is in the states and their subdivision that the exemptions, legal and otherwise, come into full flower. Some of the legal exemptions are obvious. It would be more bookkeeping for a state to tax its own property. Also, it is a general rule that charitable, educational, and religious institutions be not taxed, at least on other than their investment property. There seems to be no good reason why an endowed orphan asylum should not be taxed on its real estate, while the workman up the street supporting his wife and children and at the same time buying his house is taxed. It would be a fine thing for the country if church property were taxed, because then from every pulpit in the country we should have sermons on taxation. The ratio of legally exempt real estate to tax-paying real estate runs from 7% in Missouri to 124% in Wyoming. But in Wyoming, this is accounted for by the large area of public lands. New York exempts over $4 million of 24 cents, Massachusetts exempts 18%, and Pennsylvania at the same percentage. Illinois exempts only 9%, Ohio and Michigan 10%, and New Jersey 12%. The fair and frank taxation of realty is getting almost no attention, in spite of the fact that it is the main support of local government. In the case of rented property, the burden of this tax is sometimes on the tenant and at other times on the landlord. When there is a shortage of houses, the full burden falls on the tenant. When there is a surplus, the payment is divided according to the surplus. That is, when there is a glut of houses and apartment, landlords will take almost any rentals that they can get. Then they operate at a loss, and this loss finds its way back into the sale value of the property. The price of the property bought for rental is based on capitalization of the rental. The realty tax can make or break a community almost overnight and upset business and living conditions more effectively and more rapidly than any other tax. It is possible to take a big slice of the value of the property by increasing the rate of taxation. So many factors enter into the incidence of taxation, that is, into who really gets hit, and so many of these factors depend on the emotions and conditions of the moment, that only the pigeonhole type of mind will dogmatize. We do know, however, that too heavy a tax will either be evaded or will exhaust its source. The policeman may take an apple every day from the fruit stand, but if he decides to take a bushel every day, the Italian gentleman will either forcibly resist or will remove his stand. The policeman's protection is worth an apple a day, but it is not worth a bushel a day. We go on the tax theory that what we do not know does not hurt us. In other words, if a policeman sneaks an apple every time he passes and the Italian does not see him, it is of no matter even if he does pull out a bushel a day. But our taxes are now so large that they cannot be taken surreptitiously. The only painless tax not yet tried is the sales tax. This magic tax about which we heard so This magic tax about which we heard so much a few years ago may take any of three forms. A general turnover tax at the rate of, say, 1%, which would apply to every kind of sale, the same tax limited to the sale of commodities, and tax limited to the final sale. The general turnover tax has few friends because, although very simple to state, its effects would be revolutionary. We're continually working for a faster rate of turnover in business. This tax would penalize that progress, and also it would place at a disadvantage the businesses which did not control its products from source to consumer. That business is already at the disadvantage and is due eventually to pass out, yet to compel instant consolidation by economic force would disrupt the country. And also to tax every kind of transfer at the uniform rate would be ruinously unfair. Taxing only commodities will have the same effect as a general turnover tax, excepting that its scope would be more limited. The final sale tax is open to the same objection as the commodity and turnover taxes, while if the commodities most frequently used were exempt, the tax would not yield enough money to take it worthwhile. The sales tax would press hardest upon the people of small income, and more especially the commodity form, because about 2/3 of commodities of the country are bought by the people whose income are less than $3,000. Years ago, a gentleman named Adam Smith grew famous not only by linking the popular Smith family with the creation, but also by writing a book on political economy, which hardly anyone reads, but with which everyone setting up as intelligent either agrees or disagrees. He laid down 4 canons of taxation: that taxes should be equal, that they should be certain, that they should be convenient, and that they should be economical in their collection. These canons are completely out of date. They always have been out of date. They have been out of date since the dawn of democracy. There is not a vote in a barrel of them. We're far too busy in these days to bother with abstractions or approximations. We want perfection. We know what we want, and we want it quickly. We want the perfect tax, or failing in that, we want to take almost perfect tax. These are our canons. The perfect tax will provide ample funds for everybody and everything, and nobody will have to pay it. The almost perfect tax will likewise provide all funds for all heart's desires, and the other fellow will do all the paying. We have an incredible minimum of expenditures, the debt service. We have to pay the interest on the money, we have to borrow, and also provide sinking funds for its retirement. All the other services will sometime have to be reviewed, first to determine if they're necessary at all, and second to determine the minimum expenditures for adequate service. These points would seem evident. Lay the taxes where they'll do the least harm. Make them as simple and cheap in collection as possible. And in this consider the expense of both the government and the taxpayer. Make taxes not only highly visible but also universal, so that everyone will pay a tax and know he is paying it. Make taxes certain that they may be provided again. The 2 taxes that stand out as best fulfilling all these requirements are the real estate tax and the personal income tax. The real estate tax, we know, that is its greatest advantage. And when the assessments are fair, it is a fair tax. The personal income tax also has a great advantage. Although we do not know it very well and have not yet learned how to administer it, its special advantage is that it can be graded according to ability to pay, and because it is imposed after the money is earned, it cannot well be added into the price of goods, and therefore within limits does not break up the normal progress of life. There are a multitude of other taxes which are beginning to accept as a necessity just because we have had them for a long time in some form or other. It might be well to investigate their economy. The taxation of public service corporations and railroads has gradually increased until in 1922 the steam railroads paid 82% of their net income and the street and the electrical railways 81%. This taxation, so far as the companies are concerned, is not concealed. But as far as the public is concerned, the taxes show up in higher rates and poorer service. Corporations generally are supposed to be fair game for taxation. The United States Steel Corporation in 1923 paid $55 million in taxes and $54 million in dividends. In 1924, it paid $45 million in taxes and $60 million in dividends. The various tax units therefore came in practically on an equality with the stockholders, who had paid their money and made the corporation possible. In both these years, the taxes were in excess of 10% of the wages. In 1923, the insurance companies, which are nearly all mutualized, that is, they are in effect the cooperative societies, paid over and above their real estate taxes, around $59 million, in odds and ends of tax imposed by the various authorities. And of this, less than 4% was devoted to service of policyholders through insurance departments or the like. A corporation or any business must treat its taxes as a fixed charge and budget for them, and therefore they become a charge on production or distribution. They're bound to pyramid, and this pyramiding may raise the price of goods sold, or decrease wages, or decrease profits, or be dividends, according to circumstances among these three things. A higher efficiency may be apparently absorbed the tax by actually the absorption will be at the expense of one of these items. The tax hides, but it is there. The income tax is highly unpopular, and well, it might be because up to date it has been politically conceived and politically executed. The politicians have been afraid of the income tax. It is a tax of high visibility. Anyone caught saying he likes to pay his income tax would be admitted to the insane asylum without further evidence. And so, the thought has been not to make the tax fair, but to raise the exemptions to a point where a clear majority of voters might be tax-free. The struggle has been to keep the exemptions ahead of the increasing wealth of the voters. Do we want taxation conceived in terms of votes, or do we want fair taxation? These would seem to be elements of a fair income tax. The tax should go with citizenship. Very small returns are expensive to audit, but the payment of a head or poll tax with a return that was only an affidavit would cover it. The point of exemption for filing a return and paying a graduate tax should be determined not by the number of voters who can be released by the expense of the audit. This expense can be determined by the cost accounting but not by oratory. The items deductible as expense should be made clear in the tax bill itself and not left to the more or less arbitrary determination of the Treasury ruling, and should be made with regard to thrift and future income. For instance, traveling salesmen are penalized because they are not keep accounts which is particularly impossible for them to keep. Life insurance premiums are not regarded as an expense, although life insurance is the great American safeguard against poverty. The simplification of the form of returns and the adoption of some form of short return by which a taxpayer may simply report his gross income and taking no exemption or deduction pays a 75% of rate provided by the law. Distinguish clear between what has been called earned and unearned income. A professional man or a man who works for wages or salary uses up his capital, that is, his body and his brain, in earning of his income. What he has to report as earnings also includes a part of his principal, whereas a man deriving his income from invested capital uses none of his principal. This distinction has not yet been written into any tax bill in other than most prefatory manner. The reduction of surtaxes to the point where they will not be confiscatory and will not drive money out of industry or curb individual enterprise. This is another point where we have to decide between taxation as a method of raising money and taxation as a method of nationalizing wealth. The administration of the tax with a view to the expense to the taxpayer and not as a contest between the government and the taxpayer. If you think of taxes solely as means of raising revenue, then it follows that they ought to be laid with a view of promoting prosperity, or at least not hindering it, which is in turn means the greatest good for the greatest number, that is, frank, open, honest taxation. If you think taxes should be imposed as penalty, then prosperity is of no consequence. If it is wrong to be rich, then wealth should be quickly taxed out of existence. The reason our taxation is so entirely unsatisfactory is that it is neither fish nor fowl. Our laws have wobbled between these two principles.